Welcome to Top Wisdom. Today we're going to do accounting tangible assets. So we are going to be using this question paper, a grade 12 question paper, which is downloaded from stanmorephysics.com. This is a KwaZulu-Natal province question paper, grade 12 accounting paper 1. So it's a bit challenging, so that's why I picked it, so that you can have a better understanding of tangible assets. So without wasting any time, let's go through the question paper. We are going to start here. As you can see, tangible assets, carrying value, cost accumulated, depreciation, movement, additional at cost, disposals at carrying value, depreciation, carrying value 30 April 2022, cost of accumulated depreciation. So let's check when did the financial statement end. As you can see, the financial year ended on 30 April 2022. Don't forget that. So we're going to start by calculating A, which is additional at cost for buildings, which is land and buildings. Going to start there. Going to start. How do we calculate A? You're going to say, we are going to say 4,522,800 minus 3,452,000. This is it. You're going to say it like this. I'm repeating again. Going to say 4,522,800 minus 3,452,000. So I'm going to explain how did we get to this answer. We took the cost. As you can see the table, we took the cost on buildings. We are focusing on buildings, which is 3,552,000. Then we minus it by the carrying value at 30 April 2022. We are still on buildings column, which is 4,522,800. So we did this to get the additional additions at cost. We did that to get additions at cost. We always do it like this. Each and every time you want to get the additions at cost on buildings column, you take cost and you minus carrying value. You take carrying value and you minus by cost, which is 4,522,800 minus 3,452,000. If there was no carrying value, and I say if, we could have, and we are trying to find the carrying value, we could have taken 3,552,000 and we plus it by additions at cost, then we will get the carrying value. So we always do it like this. So we are going to B now, which is the long one. So now we are going to B. On B, we just said 102,800. Why? Because as you can see, we are focusing on vehicles. Vehicle B, vehicle, which is B, disposal at carrying value. They want the amount of disposal at carrying value. So we are taking it on the transactions, which is, as you can see there, note vehicle 3 was sold at its carrying value of 102,800 during the year. It says it was sold at its carrying value of 102,800 during the year. You just put that 102,800 during the year. And after we are going to C. So this is C. Let's go to the transaction yet again. On C, they want depreciation. So we're going to transaction. The business had 3 vehicles at the beginning of the year. The following details appeared in the fixed asset register on 1 May 2021. The business had 3 vehicles at the beginning of the year. The following details appeared in the fixed asset register on 1 May. So all of these vehicles must be taken into account. You must calculate them all. So we're going to start by saying 116,800 minus 102,800. We're going to start by calculating the depreciation. I started with vehicle number 3. As you can see, vehicle 3, the total carrying value was 116,800, the total carrying value. And I minus it with the disposal carrying value, which is 102,800, which is at B, the amount we found at B. And we're going to say 14,000. This is the depreciation of vehicle B, of vehicle 3. We are not done. We are still going to the vehicle 1. I'm going to follow up with vehicle 1. Vehicle 1, we just took the carrying value of 15,000, we minus it by 1, which is these are the laws of accounting. You must know this by now. These are the laws of accounting. And we said is equals to 14,999. Vehicle 1 depreciation. Just say that. And now we are going to vehicle 2. So on vehicle 2, I did it a long way, but you can easily check the accumulated depreciation, which is 70,400, then put it there as an answer. But I just did it the long way to get a lot of marks. I just say 352,000 multiplied by 20%. The 20% is a vehicle on cost. 20%. As you can see here, depreciation policy, vehicle 20% on cost. So I did there and said 20%. Then I got the answer 70,400. Then when I'm done calculating, I combine all of the answers, which is 14,000, which is vehicle 3, then plus 14,999, which is vehicle 1, plus 70,400, which is vehicle 2. Then I got the answer of C. So after, we are going to D now. So at D, look at the table. We have found the answer at B and C. Now we are left with D. The answer at B, remember guys, the answer at B was 102,800. That was the answer at B. And the answer at C was 99,399, which was the depreciation. We are still on column which the column of vehicles. We are still there. The answer at B, I'm repeating again. The answer at B was 102,800. The answer at C was 99,399. That's how we did it there. So now we are trying to find D. When we find D, we take the carrying value on top, which is 413,400. Then we minus it by the answer at B on disposal at carrying value, which is 102,800. Then minus by depreciation, the answer at C, which is 99,399. Then this all of them is equals to 211,201. That's the carrying value at 30 April 2022, the answer at D. So we are going to E. Look at E. E is under equipment. Now that simply means we are focusing on equipment now. So you're going to try and calculate the equipment. Going to calculate the equipment now. Let's go to the transaction first. Equipment of 116,000 was purchased on 1 October 2021. Equipment of 116,000 was purchased on 1 October. The date is really important. It's really important. So it was purchased on 1 October. That simply means it was there since October. We're going to calculate. Remember the financial year ended on 30 April 2022. I said it at the beginning. 30 April 2022. So we're going to start on October, November, December, January, February, March, April, which is 7 months. So the equipment was there in 7 months. It was there for 7 months. So let's start. You're going to say here E 116,000. That's the amount of equipment. 116,000 multiplied by 15%, or multiply by 15 over 100, depends on you, on how you want to do it. You can say 15 over 100 or 15%. Where did we get this 15%? Let's go back here. Equipment, going to focus there, depreciation policy, which is equipment 15% on carrying value. Which is equipment 15% on carrying value. That's depreciation policy. It says that equipment is 15% on carrying value. So we multiply it by 7 over 12, or 7 divided by 12, as I said it. You can simply say on your calculator 7 over 12, you get the same thing. Then the final answer is 10,150, which is equipment on depreciation. This is how we got to the answer. 15%, we got it from depreciation policy. Then the 116,000 was given. Then we calculated how much time was the equipment there, which is 7 months. The equipment was there for 7 months. So we are not done. We are still at E. We are still there. We are not done. So now let's focus. We have done calculating the new equipment, which was the first one. Now we are going to the old equipment depreciation. The new equipment, we have done it. It was the first one. The answer was 10,150. The one I calculated first. So now we are going to the old one. You're going to say 83,200 multiplied by 15%, which is the depreciation policy. The 15%, I've already said it. We're going to say 83,200. Where did we get this 83,200? It is the carrying value. This is the carrying value. You can see here on the table on top in front of equipment, on the equipment column, 83,200. You multiply it by 15%, which is equal to 12,408 old equipment depreciation. Then we say we combine both of the numbers, 10,150 plus 12,408, which is equal to 22,630. This is how you calculate equipment as far as the transactions say. This is the metric paper. So don't forget to subscribe and share the video, like the video, and don't forget that there are other videos about accounting and also English. There are most English videos. There are English videos of novel summaries and poem summaries. So subscribe as more videos are coming.